In today's energy markets, I want to focus on WTI to close out the week. We're seeing WTI down a little bit on the day, giving up a little bit of ground after yesterday's bounce. Currently right around the 53.70 level. So we are seeing, again, WTI maintaining this range. And I can tell you that at least when you look at the price activity, today's price action was in a much higher range than the previous days. So we're seeing a nice elevated range here to close out the week, somewhere between, again, that 53 half level and all the way up to 54.65, I believe was the high of the day. So we're seeing a little bit of an uptrend here as the markets digest some of the news items and the data that came out over the past couple of days. Now, certainly when you look at the inventory numbers, quite a bit of significant build there. But then if you dig into some of these other numbers that came out in the last 24 hours, we did see China GDP lower than expected, a 30-year low on that number. But if you got inside those numbers, you did see from a refinery standpoint and a activity standpoint within the oil area, a pickup in activity. And I think that's part of the reason why we're seeing WTI in the crude space as a whole holding up here at the end of the week, because we did see a pickup in refining activity in China in the past quarter. So again, moving into some of the other data points, we had the U.S. rig count today. Now we did see a second week of an increase in rig counts, very slight, an uptick in one. But nonetheless, at least for the time being, we are seeing the rig counts moderate here after declining for the last year. Looking at OPEC Plus also, I want to point that out as we move into next week. The OPEC Plus, there's a lot of news items coming out of the Middle East right now concerning Aramco, the IPO for that oil structure moving forward. It's been delayed a little bit further, it appears. But nonetheless, when you look at compliance to the production cuts, we are seeing OPEC and OPEC Plus, including Russia, significantly below what their targets were set from production standpoint. So you're seeing them in over-compliance, basically taking more oil off the market or producing less oil relative to what they had already agreed upon. And if that continues into 2020, at least there's a belief, at least to some, that that will stem some of the current price slide in the crude space as we see more and more production coming offline or being reined in when you look at the OPEC Plus countries. So again, the closeout this week, I want to focus on the production compliance from the Middle East, but also close on the dollar, the U.S. dollar, now under some pressure. We're seeing the dollar now down to levels we have not seen in several months. It's actually below 97 right now. And in theory, a weaker dollar would benefit the commodity space. And I think that's another reason why we're seeing WTI and the crude space as a whole holding up here at the upper end of the range for the week.